Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with EURUSD as usual. Let's discuss the trading plan with Miroslav Bavulski. Yesterday, a memorandum of understanding between the United States and Iran was released, outlining an immediate and permanent end to the conflict. The document reportedly includes provisions for lifting the U.S. naval blockade, withdrawing American forces from nearby areas, easing sanctions on Iran, and unfreezing Iranian financial assets. However, until the agreement is formally signed and implemented, markets are unlikely to fully embrace the risk-on narrative. As a result, demand for risky assets could remain limited in the near term. In the first half of the day's sessions, traders will focus on Eurozone CPI data, core CPI figures, and comments from ECB President Christine Lagarde. If the inflation numbers come in line with expectations, a major market reaction is unlikely. The ECB's recent rate hike has already reinforced the central bank's inflation-fighting stance, leaving little room for surprises. If EURUSD moves lower, the key support level to watch is 1.1592. A false breakdown at that level would provide a potential long entry, targeting a recovery toward 1.1620, which also marks the weekly high. A breakout above 1620 followed by a successful retest would confirm bullish momentum and open the door for a stronger rally towards 1645, where sellers are expected to become more active. The final upside target stands at 1664, where profit taking is likely. If EURUSD declines and buyers fail to defend 1592, bearish pressure on the euro could intensify, paving the way for a deeper move toward 1.1566. Only a false breakdown there would justify fresh long positions. Otherwise, aggressive rebound buys can be considered from 1535, targeting a 30-35 pip intraday recovery. Sellers need to take control early today, otherwise the bull's move in EURUSD could accelerate even further. Their primary objective during the first half of the session is to defend 1.1620 resistance level. A false breakout there would provide an attractive short entry opportunity, targeting a move back towards support at 1.1592, where the moving averages just above the level continue to favor the bulls. A break and close below 1592, followed by a successful retest from underneath, would confirm renewed bearish pressure and likely trigger a broader euro sell-off. This scenario would open the door for a decline toward 1.1566, where stronger buying interest is expected to emerge. The final downside target stands at 1535, where profit taken on short positions is likely. On the other hand, if EURUSD extends higher and bears fail to defend 1620, the euro could stage a much stronger recovery. In that case, it makes sense to postpone fresh shorts until the next major resistance at 1645. Only consider selling there after a failed breakout and rejection from the level. As for aggressive fade trades, short positions on the direct rebound from 1.1664 remain in play, targeting a 30-35 pip intraday pullback. Let's trade with the MACD indicator. It's time for GBPUSD. Jakub Novak presents. You could plan to buy the pound today at the entry point around 34.34, with the growth target at 34.67. At around 34.67, you could intend to exit the long positions and open short positions in the opposite direction. Expecting growth from the pound today is possible after strong inflation figures. Before buying, make sure that the MACD indicator is above the zero mark and is just starting its upward movement from there. You also plan to buy the pound today in the event of two consecutive price tests of 1.3406, while the MACD indicator is in an oversold area. This will limit the pair's downward potential and lead to an upward market reversal. We can expect growth toward the opposite levels of 34.34 and 1.3467. You could plan to sell the pound today after a break of the level at 1.3406, which will lead to a rapid decline in the pair. The key target for sellers will be level 1.3373, where you intend to exit shorts and immediately buy back in the opposite direction, anticipating a movement of 20-25 pips in the opposite direction. Low inflation will put pressure back on the pound. Before selling, make sure that the MACD indicator is below the zero mark and just starting its downward movement from there. You could also plan to sell the pound today in the event of two consecutive price tests of 1.3434, while the MACD indicator is in an overbought area. This will limit the pair's upward potential and lead to a market reversal downwards. We can expect a decline towards the opposite levels of 34.06 and 33.73. That's all for today. See you online soon.